Hello. Trading is closed on January 23rd, 2023. Let's start with our disclaimer, go over our calls and make some predictions. It's my trading plan for Tuesday, January 24th, 2023. Please remember, I can be wrong. Any trade you make should be at your own risk. We looked for the pattern with the early low, which is this, and tomorrow should have the early high. We had a number of lower targets, and we had a great plan if we stopped at 39.76 cash. We also said if we gapped up smartly that the whole call was killed. Well, we never defined smartly, but we certainly gapped up over 39.76 cash. And we also promptly took out some resistance level. Once we took this out, the whole plan was killed before the open. I can't say if the 5 points we gapped up is enough or not, but when you're trying to pick a top in a strong move like this, if everything doesn't line up perfectly, I tend to stand aside, and when we gap up over my price target, for me that's sharp enough. I admit some people might not agree with me, but that's what makes a market. Early on, MEJT gave a signal to buy. That worked. It said this rally was false, price would retrace. Now says this drop is false and price would retrace. Gives us a target of 40.2802. We're going to say this one might not work. One reason is about twice a year I get a cluster of price targets which do not print in their preferred time frame. They all print at some point eventually, but we've had so many targets recently which aren't printing in their preferred time frame. I'm taking this with a grain of salt. Also, if we're going to have a change in trend, we almost always will leave a failed target. And I also don't like the fact that we gapped up, hit a high, hit a higher high, closed under all those highs. That's a negative pattern. If you don't gap in either direction and promptly take out this high, we should see lower prices tomorrow, even if we don't close lower. We came pretty close to hitting a price target from the 14th of last month. We missed by a fraction of a point. That's close, but no cigar. We have to leave this one on the list. It's not within the tolerance, and so we stopped pretty close to resistance. Now we had this trend line here. We said if we're going to have a sustainable move, we should gap over the line, or the line wins, meaning you return to the line. Well, that's not much, but it isn't a gap over the line. So that doesn't mean you have to pull back tomorrow, but I think we're going to pull back to that line. We also, let's remember what we said when this line broke. When this line broke like this, stopped at the Fibonacci target, we then traded under this low by 1 cent, not much more than 1 cent, under this close by 1 cent. I said that meant the move is not over, and almost always you're going to see more than that. But I also said because we dropped in a straight line from the upsloping trend line, that we should retrace to this line, and we're pretty close to that line now. Once in a while, you don't make it all the way up to the line. You make it only up to the point where you broke through the line, and we did that today. So sometime between that break and this high, I'm looking for us to reverse and that line to hold. We have completed an ABC ending this bear market. We had wave 1 up, we're making wave 2. We have an ABC here, but this can't be wave 3 because it can't be counted cleanly as a 5-wave structure. I count it as a 3-wave structure, and that means it's a B. At some point, we don't know where yet, it should end, and we should have a wave C down, after which we have a huge rally. Now, if we end here, we'll see what happens. But if we end here and we pull back 61.8%, that would be a pullback to 3,700.81. Saturday was a change in trend date. And when that comes on the weekend, it can happen either Friday or Monday. So today was a date for a change in trend. If that's A and if that's B, you can count this as an A and a B and a C, with C equal to 61.8% of A. If that's the right count, this will hold. And if wave C is equal to A, come up with a price target of 3703.29, which is close enough to the 61.8% pullback, which makes today's price and time and target reasonable for the end of the move. Doesn't mean it has to work, and doesn't mean other numbers won't work. But this big rally, a gap up, hitting higher highs, closing under the highs, is a negative pattern. And if we don't vitiate it by going over this fast, we should drop. And this is one of the prices, not the only price, but it's one of the prices that works for the end of the move. Signals are mixed. We said that we should have a gap and prompt move outside the day's range. We got that today. These are the commonest things. Tomorrow's pattern has really high. We could still gap down. Typically, it's a rally day with a high in the final hour. If you fail, it's a straight line drop. There's a higher MEJT target. Unless we gap down smartly, the rules call for it to print. Recently, a number of the targets have not printed in their preferred time frame. Happens about once or twice a year. Targets all should print at some time, but for now, I'm assuming we're in one of those periods. We will see the numbers, but we just have to rely on other stuff once or twice a year. Signals are mixed. As positive, there's a higher target, but it's negative. The rally closed under midday highs. It counts as a 3-wave structure and should retrace. Today's high is one candidate for a top, because the breakover resistance wasn't a gap over the trend line. It wasn't strong enough. We have the fibs and we have the time. If we don't get the standard pattern, it's going to be a straight line drop, and that we don't know at this point because the standard patterns are rally and there are higher targets. But if we don't get the standard pattern, and if we get a straight line drop, and if this holds, could take us down to 3,700. Tomorrow's pattern has the early high. Usually it's a rally, but if it fails big. And that's today's call.